Good afternoon, everybody. Welcome to Trader Merlin Show. It is your Monday edition. Make sure everything's working over here. I haven't done a show in a long time. My hair looks all disheveled. I look like a mess, but tell you what, pretty excited to be back. Before I dive into today's show, let me talk a little bit about where I was for the past few days. As you guys know, I went to Orlando and was speaking at the Money Show conference, which was awesome. Like I say, it was awesome. Not only was it just great to get back in a public setting, a public stage, and educate, share information, as you guys know I love to do, but also all the people I met. I had some just phenomenal opportunities, not only to meet people that are fans of this show. This is Mike Larson, who had interviewed the other day. This was one of my small little short 20-minute panel discussion, actually not panel discussion, more of an interview really, on cryptocurrency and digital assets, which I had a lot of fun doing that one. And then I got to meet Les Gold. I started off our show with Les Gold. He's the number one in the room. So Les, obviously a great time hanging out with you and getting to chat and getting to know you. It's difficult for me because I can see your engagement and the enjoyment that people have in this community and in this, in this forum, but that's only through text. I don't get to see or, get to shake your hands or give you guys a hug or something like that. So it was great to actually meet people face to face. And I've had the privilege of meeting Big Eb and now Les Gold, and hopefully several others of you all get a chance to meet in person as time goes on. But I will probably be at the Las Vegas Money Show. I think that's in February, but we will see how that one goes. And I look forward to seeing more of you. And maybe I'll even brush my hair when I come back onto the show. As far as people that I met, so Kim and Charlie Githler. So Kim is the one who puts on the Money Show. Her son Charlie is helping run it. They just have a great team. They're just a really good team of people that are working. And Kim is always unbelievably gracious to me. Mainly the people that she's rubbing elbows with are the high society types, right? So one of the big guys there was Charles Payne. So Charles Payne is one of the premier hosts on financial television. He's on Fox. I usually don't hold those people in too high regard. I feel like in many cases that they're puppets and just kind of being fed information. However, I had the opportunity not just to have dinner with Charles and several others, but sat pretty much right across from him. What a great guy. Phenomenal. Actually just exceeded all expectations of someone that's knowledgeable about the market. And what I really respected about Charles Payne was the I don't give a shit attitude. He really was more like, my viewpoints are my viewpoints. And if you don't like them, that's okay. You can move on. And I think that's kind of the attitude that I have as well. And we actually had a couple things that we didn't agree on. He's like, I don't agree with that. And I'm like, perfect. That's okay. We can still have a good discourse about this. So yeah, I really enjoyed having just talking to Charles, and maybe down the road we'll see, maybe get me on to Fox News or something, talk crypto, because there's some holes in his understanding of cryptocurrency and digital assets. So let me fix this. See, I'm sorry, as nobody pointed this out. It is not the 10th today. It is the 20th of October. So let's fix that one real quick. So Charles was one of the main kind of big names there. I met a lot of different people, and some people I'm going to actually try to bring on the program and maybe share some insights into different market segments. I also saw a couple pieces of technology, which I think could very easily, you can't go to Fox. Because of my political views, I keep my politics out of it. When I talk about digital assets and things like that, politics have nothing to do with it. But I know. It'd just be fun to get back on TV. I actually really enjoyed when I was on CNBC, but the biasness of CNBC at the time, prevented me from going back. Just got kicked off. Love it. He did come from a poor family and did well. So I had several presentations. I may actually do one of those presentations as a show because I felt like I was shortchanged. I think Les was in the room. We were just starting off my presentation on stablecoins, and I had the title slide up. And literally, the moment I go to the podium to start, poof, power goes out. And now that the power goes out, and I'm like, well, how am I supposed to do this? The projector's broken. The projector no longer works. They got tech support, and they're trying to fix it. I did a 1-hour presentation without any slides. And it's difficult as an attendee to understand and grasp all of that material and understand it. I think we did a pretty darn good job under the circumstances. For 1 hour, I turned my laptop on because that was still running, but obviously most people couldn't see the information was presented on. So, I think it goes to reflect one of my big mantras, which is, living through adversity. And when life throws you some curveball, you just gotta I could have panicked and thrown up my arms in tantrum and just walked out and said, I'm not doing this. Instead, we did it. We knocked it out of the park. Other highlights, and this is probably one of the biggest highlights. We may actually have some students here today. If you are one of those students, let me know. I had the privilege of speaking for a MoneyShow University. So they had a special room set up, and there's supposed to be several different universities in there. I guess something happened with the buses, so it was only like 50 total. There's supposed to be 150. And, as I get older and older, and I think many of you would feel the same way, it's nice to give back or at least help guide the youth of today, because I feel concerned for the kids today, which, are facing AI. They're facing these challenges of getting their degree and going out in the workforce. And some employers are like, well, great, you seem like a good person, but I got an AI that's going to do better than you're going to do, and it doesn't cost me as much. So I got invited in to speak to them briefly. Unfortunately, I came in right after lunch, so all of them were still at lunch. And so my group that showed up was actually rather small. I'm the only one that did not get a formal introduction by the host. And whoever the host was, you didn't even say my name one time. Appreciate that one. At least let people know who I am. But I got a lot of positive feedback because, as you guys know, I try to be very candid and real about markets and market expectations. One thing that drives me nuts is when people give you this false hope that trading's super easy and all you have to do is turn on a computer and you make tons of money. The few presentations I did see in there in front of these students was all trying to sell something, right? Sell some software, or sell some subscription, or sell some newsletter to these poor kids. And I'm like, guys, here's the real deal. Here's how the real world functions, and here's what you should be thinking about. I did not wear the Trader Merlin. I didn't even bring it. I should have brought it with me, but that was actually one of the more rewarding pieces. And then we went back to the exhibit hall, and a lot of them came up and talked to me after, which, there's no reason for me to embellish or candy coat or make up anything that isn't true for these kids. So it was just a very candid, down to earth, like, this is the real deal. I'm not pumping you full of BS. This is what really you can expect. The real expectations of not only a job, but of trading and of investing. And there were several that really grilled me and took advantage of the opportunity. So cheers to those of you that did. I wish that when I was in my late teens, early 20s, one of the gentlemen I talked to was 19 years old, and man, he just kept firing great question after great question after great question. And I wish him all the best. I wish all of you guys the best. But the questions that were asked, again, were very blunt, and I had no reason to candy coat it. Crypto was a very hot topic, Margaret. And it's unfortunate because at this conference, I think I'm one of the only people that got up there and talked about cryptocurrency and digital assets. How many of these people are following you or here now? I don't know. They're probably at school. They're probably at school, Lisa. I know a lot of them went back and said, hey, we watched your show. I'm like, cool. Yeah, welcome to join anytime and ask questions along the way. But on that vein, let me zoom in. Maybe I don't need to zoom in. Mostly, when you go to these money shows or traders expos, obviously there's an exhibit hall and people are trying to sell you some service, some newsletter, some picking thing, or some oil investment or something, right? There are always some sales. I did get to see Jeffrey Hirsch, which was awesome. He looks great. Guy's lost like 60 pounds. He's just lean and mean now. Jeffrey Hirsch is the guy that runs Trader's Almanac. So they had a little booth there. We talked for a bit. Maybe I'll get him back on in the next couple months. But every now and again, you see some claims and you see some statements that are made that make you just shake your head and go, are you kidding me? So I want you guys, just imagine, if you will, I'm going to make this bigger for you guys to see because it might be kind of hard to see if those are watching on their phone or something. So hold on one sec as I modify my presentation here to make this picture even bigger. So what I want you to do is imagine you're walking around this exhibit hall and you come across a booth and you see this sign on the wall. And what goes through your mind? Type in a chat what would go through your mind if you saw this on the wall. Now, for those who listen to the podcast, I'll read it to you. First off, it's an empty booth. There's nobody there. And then on the wall, there's a banner that says, not making 5% a day? We need to talk. And it says day trade SPY. And before I go into my rant on this one, I'm just kind of curious. I know there is a delay here, and I was wondering, kind of what people thought about this one. Yeah, Kenny says scam, red flag. Big Eb says total BS. Yeah, it's just, how can you say this? Like, what the gall of somebody, and again, you guys all know the realistic, what you can get from the markets. And when I was talking to Charles Payne, one of the things that he's upset about is he doesn't believe that people should have the expectations of, 9%, which is that historical average of the S&P 500. He thinks you should do much better. I do agree with that. If you can't do better, then just buy SPY and call it a day. But the fact that these guys have making 5% a day is just astounding. And here's where it gets interesting. So this is one aisle. The next aisle over, there was a gentleman with FINRA, which is one of the main regulatory bodies for the financial markets. And I said, could you do me a favor? Your whole booth is here about investor protection. I took a bunch of documents. By the way, I'm going to try to get FINRA to be on the program to talk more about that. And I said, could you do me a favor and turn and just look at that sign right there? And he literally turns and he goes, I know. He goes, I know. I said, then what do you do about it? You know, as someone who is a financial regulator in the industry and you're designed to protect investors, if people see this, the smart people, the ones who understand how it really works, meaning my audience here, are going to look at that sign and go, what a joke. Come on, man. You're an idiot. If you fall for that, shame on you. Good to lose your money. But remember, you guys don't represent the average trader or investor. And I think what sucks is there's going to be people walking through that hall that stop and talk to these guys about making 5% a day. Have I had 5% days? Countless 5% days. Countless. Can I do it every day consistently? Not a chance in hell. And no one can, right? If this sign was true and I could get it in writing that I could make 5% per day, I would mortgage my home. I would get every single penny I could possibly get and put it in that system. But they would never give you a guarantee of that because it's not possible to do over and over and over again. These people shouldn't be there, right? These people are just really, really, really morally bad people. John says, I feel better now. You should feel special. You know, I think that once you get a certain knowledge of the realization of what trading is, right? If what the rules are, what the probability is, and if I can stack those odds slightly in my favor, then yeah, I'm going to beat that historical 9% average rate of return by the markets. But am I going to beat the average annual return for the S&P 500 in 2 days? Like, no, come on, man. That's just it's happened, but nothing consistent. Listen, Merlin, your 1% trades are lacking. You should sign up. Remember that the 1% per month is in my biggest account, and that's the minimum. I'm shooting for more than that. The active one that I'm doing, that I'm sharing with you guys for the show, that's 1% per week. But I'm trying to do better than that as well, which we've been doing pretty good. I'm looking forward to the year-end, knock on wood, accounting run through. Steve said, dude, I talked to the guy. I couldn't because my inner rage, my inner, I guess, parent, if you will, that wants to protect the average investor, I would have lost it. And what I don't want to have happen is, the people who are paying for the booth. Remember, MoneyShow needs to make money, and these exhibitors are paying to be there. If I go too hot and heavy on this guy, they may back away and no longer be a participant, and that would be damaging to the MoneyShow. So I think it's more about investor education and making sure that we all kind of understand the realizations, expectations are being realistic. That was just unbelievable. I was fuming, Oliver. I was just like, are you kidding me? Unbelievable. You should never judge a book by its cover. Maybe that's just a catchphrase. Well, if your catchphrase is not making 5% a day, we need to talk. I don't know about you or whatever, language we speak, but that is directly implying that you should be making 5% per day. And if you're not, then talk to these people. So this is definitely judging a book by its cover. They were selling some subscription news service. It was like $399 a year for their basic platform. And it's just, I don't know. I feel bad that I'm even showing their name to give them any sort of publicity or press, but please don't sign up for that garbage here. Other than that, most people were pretty good. I went and talked to quite a few. There were some software pieces that I definitely want to share with you down the road. Amazing. I witnessed some stuff that is absolutely amazing as far as information aggregation and data. I may actually use it. I've got to pay a monthly subscription. I'll see maybe if I can get them to sponsor the show and just let me have it for free. It's not like it's a lot of money, but the more I keep getting more and more expenses for this show, for data, for hosting, for streaming, all that stuff. So if I can get them to give it to me, that'd be even better. But basically, it's using an AI engine to help you compare anything that you want. Anything that you want. You could put something in like when Trump issued the tweet on Friday about China and about the tariffs. This is the previous Friday. Show me the 48 hours before and 24 hours after on how all the Magnificent Seven stocks performed, and do the same comparison with the top 10 cryptocurrencies, and it'll instantly create all these charts. It shows you all the information data. I can't even begin to explain all the different stuff it does, but it was incredible to see this software. So I will talk more about that maybe later on this week. Let's see. So that was pretty much my big update. As you saw the talk track or the thumbnail, right? Our clickbait for today was Btfd. And for those that know, that stands for buy the. You can use any sort of F word you would like. I'll use the politically correct one, which is frigging. Buy the friggin' dip, right? Buy the freaking dip. And this was echoed by several people at the show. One in particular actually was Charles Payne, which I thought was kind of funny. He actually dropped the full F-bomb on the audience. And I was like, oh, wow. All right. I tried to be a little more sensitive, but got a lot of laughs out of the room. And, when you look at what that essentially means, it's just saying, look, we're in this unbelievable bull market. If you have pullbacks, buy the pullbacks. And I agree with this 99%. There's that 1% in me that's not 1%, probably should be more than that, but there's that small little piece that says when these markets go beyond a certain level, then you should either go full on protection or get out of your positions. And this is where Charles and I will certainly butt heads and have differences of opinions. He's right in saying things like this, that we are witnessing a once-in-a-lifetime generational wealth machine, right? And I'm going to keep that blue line there. I mean, really, if you look at what's gone on since 2009, this is, in my opinion, a once-in-a-lifetime money-making machine. And I think it's going to continue until it doesn't. So when we have these big dips, yeah, I do think buying, especially buying strong companies, which are in the leading position, is absolutely the way to go. And I think that that's going to be a much higher probability of growth of your accounts. It's going to exceed the S&P 500. Now, he thinks it's the great repeat of the Roaring '20s. I actually would agree with that. And remember what happened after the Roaring '20s? We had the Great Depression, which is why I approached this topic right as I started is, yeah, Btfd right now. Buy pullbacks. But there has to be a point on that pullback where you go, enough. I'm going to either go to cash or maybe even start hedging my positions or just go short. Because all of this is going to come to an end at some point. And again, we don't know how big of a crash it's going to be, but Oliver gives me such a hard time because I'm the doom and gloom guy. Well, I am definitely expecting there to be a big pullback, but how am I making money this year? Almost all of my trades have been bullish and making profit when the markets move to the upside. So even though in my mind, I know for a fact that this market is going to crash. I guarantee it, guys. I guarantee it. This market's going to crash. I just don't know when it's going to happen. So right now, we should be in this Btfd phase, which is we have so many driving forces. Unfortunately, I can't remember the gentleman's name. On the first night I was there, I had dinner with one of Trump's cabinet, which I cannot remember his name. Shows you what I care about politics. But this guy he's on Trump's policy, economic advisor currently. He sat a couple seats from me, and I had no clue who this guy was because I don't care about politics. But he got up and gave a little speech. Yeah, there you go. Thanks, Les. It was Steve Moore. So Steve Moore was literally 3 people down from me at the dinner table. And he got up there and he started talking about his viewpoints on the market. Now, obviously, Mr. Moore is going to be biased because he's an advisor to Trump and he wants the economy to do well. But his viewpoints are pretty positive. And it really felt like he was extremely bullish. And even he looked down at the table for a second trying to gather his words and he goes, I couldn't be more bullish on this market. I couldn't be more bullish on his policies and what Trump's doing. And again, whether you love Trump or hate him is irrelevant to me. But it was interesting seeing someone so prominent in Trump's circle so bullish on the markets. You do look at what's going on with China, the deal we made with Australia today with regards to rare earth minerals, and now that might be a bargaining chip for China. Who knows? I feel like there's just this much higher probability that these markets are going to continue to move higher and higher and higher until they don't, which is why I decided to start that show with Btfd, because some of the people I talked to and presentations I went to at the conference, there was definitely a very bullish vibe. And the only concern I have is that when you have everyone bullish, then that's when things start to turn to the bearish side. Yes, he did. I didn't go to his keynote speeches, unfortunately, but at the dinner table, he did talk about it. And he said, it's going to be a give and take type of battle. And he said Trump's a great businessman, a great negotiator, which I held my tongue on that one a little bit. But obviously, I'm not trying to ruffle anyone's feathers at dinner. But he did mention China and said, look, we'll come to an agreement. And I do think so. I think that the U.S. and China are going to come to an agreement. It's just this art of the deal that Trump likes to do, which is shock, and I'm going to give you triple-digit tariffs if you don't give us the minerals we want. Look, no country wants a recession. If we put triple-digit tariffs on China, we're looking at recession, depression type stuff if it goes on for a long period of time for both countries. So, no one wants that. So they'll come to an agreement, they'll work it out, but it's just shock and awe at this moment in time. So he seemed like a really nice guy. Unfortunately, he had to leave right away. He just had a quick bite to eat and then just took off. But one, the economy is not the market, and the market is not the correct. Yep. Now they certainly do impact each other, right? But they are definitely distinctly different pieces. You could have an economy that is very robust, and the market starts looking very weak and starts selling off. From my perspective, that is usually, I look at the markets as the leading indicator for the economy. So if the stock market starts to sell up, my tongue is tied today. I feel like I just did a tongue twister there. When the market starts to sell off, to me, that is indicating that there's either currently or the prognosis is that coming soon, we're going to start to see economic data change. So I would argue that they are not tied together, but I would argue that the market is a leading indicator for the economy and the decisions about the economy. No Whiskey Monday. Unfortunately, I received an amazing bottle of whiskey, which I did drink, and it was, I normally don't check bags at the airport, but George bought me a fantastic, amazing bottle of whiskey. It's probably the smoothest whiskey I've ever had in my life. I'll bring it up on the show on Friday. But yeah, I had to check a bag because I wasn't going to finish this bottle. It was a very nice one. But anyway, yeah, we'll do a Whiskey Friday one. Whiskey Friday. There was a quote by Mark Skousen: "If goods don't cross your borders, armies will." Yes, that was a good one. That was a great one. And by the way, Mark Skousen has a new book. I did meet Mark Skousen. I've met him before. He's been on the program several times with John O'Donnell. He's a good friend of John O'Donnell. So he is going to come on the show. He's got a new book about Benjamin Franklin. He says the greatest leader of our time or something like that. So, did I learn anything important from other guests at the show? Good for you, Les. Good. Support. Let me know what you think. I'm curious. Unfortunately, I'm not a really big reader. I don't really enjoy reading, although I did buy a Jack Reacher book on the way, on the flight back. So, Margaret, that's a great question. Did I learn anything important from the other guests at the show? Man, without sounding very cocky and arrogant, I mean, I'll be honest, I really didn't. But again, Margaret, you got to take that with a grain of salt. I'm someone who has been in this industry for 28 years. I immerse myself in it, so I like to think that I've got a pretty good handle on all of the stuff that's out there. There was a guy that did a 2-hour paid presentation on cryptocurrencies, and I thought it was ridiculously basic. There wasn't one piece of new information that was gleaned. Even the audience, I think, was just kind of bored with it. And most of the presentations I went to weren't really delivering anything of substance and value. There was a little substance, but mainly like, hey, now you want to, subscribe to my newsletter. I did like Mark Skousen's perspective, and it was interesting because Mark Skousen, obviously, as an economist, he got up on stage, and the first thing he did is he started bashing Trump. And I was really kind of like, oh, geez, do you realize where you are, dude? This is Florida. Which is a very, very Republican state. And I've learned over the years, whether I love a political party or not, and I remember which side I'm on, it doesn't matter. It shouldn't impact my trades. But Skousen, as an economist, said a lot of interesting things about tariffs and the border and Trump's actions that he doesn't think that they're going to work. He thinks they're actually do more damage than good. But I'll be honest, Margaret, I really didn't walk away from myself going, wow, no epiphany moments. I can't remember the gentleman's name. He's an oil expert, Aziz Azari, I think, or something like that. Aziz, brilliant mind. And one thing I do appreciate about a specialist, right? Like you can go to your general practitioner, your regular doctor, and they know a little bit about everything. But then you go to that expert, and the expert is so knowledgeable about something. And this guy apparently was on the Saudi oil committee. He was on their council. Like, he knew everything about oil. And unfortunately, I didn't get his contact information. I wish I would have, because I'd like to have him on the program to talk more about oil. This guy hates Bloomberg. He hates Bloomberg because Bloomberg apparently, from his perspective, is issuing all these fake stories and lies about oil and the Saudis and all this stuff. And I learned a little bit from this guy about, there you go. Thank you, Richard. Yeah. Anas Anhaji, he was great. He was a really nice guy. He sat right across from me. He was like directly across from me. I had some fund managers off to my left, software guys in front of me. But no, I didn't walk away with any real epiphany. But I'm hoping that in my presentations, my attendees felt the other way. And I did get a lot of people that came up to me after my presentation. They're like, wow, I just did not know. I didn't see this. I didn't think about this stuff. And, especially as we progress and we start to see more of the stablecoin infiltrate our markets, we're going to see these blockchains become much more prolific and commonplace. So I think you guys already have a huge head start on the average investor with regards to understanding crypto, digital assets. Whether you want to buy Bitcoin or Ethereum, that's fine. But more importantly, being cognizant that this change is coming. It is an inevitability. Whether these companies like JP Morgan or Merrill Lynch build private blockchains for themselves or they use public ones out there, adoption's coming. And that adoption should cause things to move up over time. Unfortunately, what we witnessed over the weekend or the last few days was not great for crypto, right? That bottom out was not very good, although we're starting to move back up, and we'll look at some charts here in just a second. He did not say how low oil was go. No, he didn't give any predictions. He's got a newsletter that he sells apparently, and that's where these guys are making their subscription basis off of. So let's go back to crypto. We'll look at the future side of things. So this is your weekly. Obviously, we had 2 horrific weeks. Now we're starting off on a much better note. I'll go to the daily here, and I'll go to the spot price, not the futures. Yeah. Grumpy might be an understatement there, Big Eb. He says, glad to see Bitcoin over 110. I was grumpy at 105. Yeah, I was concerned. I was definitely concerned when it broke 104. We broke 104 on Friday. That was not good. We got all the way down to a low of 103.6. Like, oh, man, not good. But now it starts to look like we're getting a bid put underneath it. You can see the spot price here moving up. We were up 2.04% today, which is great. We were briefly in the 111,000 mark. We hit 111.7, so it was nice moving up to the upside there. But all in all, it's great to see a little bit of a recovery here. Now, Patrick says, you don't think pullback to 80K would be a good thing? Well, not that it's necessarily a good thing, Patrick. I mean, I'll put a line there at 80,000. And good to see you, Patrick. Hope you're doing well. I'll put a line here at 80,000. That would take us all the way back down near these lows from April of this year. I think that might be a bad thing. I think that would be a bad thing. I'm more inclined to think along like with Steven here that maybe, I really think 100,000 was the level, right? Because you can see going back into May of this year, we bounced off it. We actually bounced a couple times. We broke down below it on the 22nd of June. But, for me, 100,000 is such a big whole number that whole number psychology, I think, is very, very relevant in the way that we price things, right? The way that we put our stop losses in, et cetera. So for me, 100,000 is a pretty critical level. So I was glad to see that we stopped at 103 and change. But yeah, the good whole number theory, to me, 100 should be it. Remember, if we start breaking 100, what that really signals is we've reversed that trend. We're making new lows. And I don't think that would be a good thing. I don't think that would be a good thing. So I'm glad we're holding. Good to see 111 right now printing. So we'll keep that going, and hopefully that carries over here. There are a lot of other ones that were doing better. Let me bring up one here before I lose track of everything, and I can't remember the name, but there is a brand new... I'm starting to have a problem with these treasuries. So when you look at something like Bitcoin's treasury, there's no... Bitcoin is a commodity. There is no business that runs it. There is no team that's making changes specifically for Bitcoin. It's the community as a whole. So when you have MicroStrategy or 21 Capital or American Bitcoin, these companies are out there buying Bitcoin as a hold of this commodity. Remember, my big problem for Ripple is not, in my opinion, a cryptocurrency. It is a financial product created by a company called Ripple Labs. So we have these treasuries that start up. And most of these crypto treasuries, and I have a whole list over here on the left-hand or right-hand side of my screen, I'll show you those. Here's a bunch of different treasuries, right? Some having Btfd looking great today, up 15%. You had CWD, who's up 11.6% today. BMNR, the Ethereum one, up 7.92%. So looking pretty good. MicroStrategy up 2.33%. So fine. Most of these are decentralized. They're businesses, but they're on cryptocurrencies which are decentralized. So you have Ethereum ones, you have Bitcoin, you have Solana, you have WorldCoin. However, Ripple is controlled by Ripple Labs. I mean, and this is the easiest way to figure this out. Let's just go to Ripple Labs. Ripple team. So if you go to Ripple team and look at their leadership, I'm going to go as transparent as I can be. I just did a Google search for Ripple team. If you typed in the Ethereum team or Bitcoin team, none of this should ever come up. None of them should come up. But you go to leadership, look at that. You got a CEO, you got a chief technical officer who looks like he was on a bender last weekend. You got, a president, a CFO. No other crypto has this. So how can you call this a crypto, right? This to me is a business product, which in theory, because you have a team that's building products and services with the intent of making a profit, this actually fails the Howey test, and this is a security. Ripple is a security, folks. I don't know how it got through the SEC. Actually, I do know how it got through the SEC. It got through the SEC because Ripple has 41 billion Ripple coins. And let's say it was valued at $3. I know it's less than that, but valued at $3, you got 41 billion of them. That means you got $123 billion worth of capital to pay off politicians to look the other way and call you not a security. Now, why am I on this rant? Unfortunately, I left my notes downstairs as I was researching this afternoon. But there's a brand new treasury, and it's Ripple. It's a Ripple treasury, which, okay, I'm fine. It would be a Ripple treasury. Can you guys tell me who is funding this treasury? Who is paying to buy more Ripple? And you would think that it would be some kind of fund manager or something trying to take advantage of it. It's just like, are you kidding? Ripple is trying to raise $1 billion, which again, they already have 123 billion in cash. Ripple is funding the treasury. So remember, Ripple Labs creates all the rules for XRP, which is Ripple. Now, Ripple Labs is creating a treasury to buy Ripple, to drive the value of Ripple higher, which they have 41% of all of the coins available on the planet Earth. This is like, I don't know, it seems like the ultimate Ponzi scheme. Imagine a different scenario, right? The reason I'm a fan of these treasuries is they are decentralized. No one controls them except Ripple. Imagine that Apple, they go out there and they get a SPAC. They buy a specialty purpose acquisition vehicle. And in that SPAC, Apple gives them $5 billion. And that SPAC is designed to buy Apple shares. And all they do is just buy Apple shares constantly. Is that market manipulation? Is that deceptive practices? Like, what's the benefit of them buying Apple shares? It's to drive the price up. I look at what's going on in the Ripple and their new acquisition vehicle, this SPAC, and to me, total scam. Total scam. Now, Future Trader says Google Ventures. It's different when you have an asset. So let's say you're Google and you start Google Ventures, which you put a bunch of capital in there. What Google Ventures is doing is out buying different companies that it sees as being important players, which could be synergistic to their operations, right? What it's not doing is going out and outright buying Google shares and doing nothing but buying Google shares over and over and over, because I'm pretty sure there's some regulatory rule against that. So I don't know how on earth Ripple can sit there and fund a SPAC to buy its own tokens and drive the price up. It just seems like an absolute scam to me. Like Elon Musk buying his own stock. I think that's a bit different. MTB says XRP to the moon. Yeah, what will this do, MTB? It will most likely push Ripple higher and higher, which is fine because I own it, but I think it's deceptive and wrong at the same time. So Patrick says, like Elon buying his own stock. I would argue that there's some similarities there. So let's say you're Elon Musk and you're the king Tesla. You take your money and you buy your own shares. That's okay. You're an individual investor and you're using your money. What Ripple Labs is doing is creating an entity. It's creating a business. And in that business, they are selling shares. See, Elon Musk is not selling shares of his own investment accounts to buy more Tesla shares. He's taking his capital and buying Tesla shares. Great. Totally fine with that. But when your company creates another company that's public, because now you have the shareholders on the line. The shareholders of this new SPAC are expecting to make a lot of money. So because it's a Ripple treasury, all of these people are going to jump on it and buy it and drive the price way up. That company will now issue more debt, buy more Ripple, and it does it as a separate entity away from Ripple Labs. To me, that's the problem. If any insider buys their own shares of their own money, good on them. Absolutely, good for you. If Google Ventures wants to buy some NVIDIA or some, SoundCloud or something, great, good for them. But if all of a sudden Google Ventures took billions and was buying their own shares, I'd raise an eyebrow to that and I'd call there's something fishy there. Do you consider anything that is a scam something that doesn't last? No, I think something that's a scam is when there's math behind it that is deceptive at best. And I think when you look at this new project, now I want to dig into it deeper. When I look at this new project, this treasury for Ripple, it just stinks. It stinks. You're basically creating something that's going to drive your own share price up. And it's going to do so on the backs of retail shareholders. Because you're going to market this as the greatest thing ever because treasuries are super hot right now. I mean, they are one of the hottest things. You might remember a couple years back, I did a show on SPACs. And on that, we talked about how they are extremely dangerous because the valuations can get pumped up way too high and usually come crashing back down. I would contend that when we see this thing go public, and I will give you all the ticker symbols tomorrow because I forgot them downstairs, I would wait for a giant rally and look to short that thing. Because over time, the realization is going to be that this is just a shell. There's nothing there. The valuation, there's no staking rewards for Ripple, so there's no extra income there. Are stablecoins better than treasuries? No. Stablecoins are not better than treasuries. Great question, Patrick, but they're two very different things, right? So a treasury, obviously issued by the government, I can get short-term yield. I can get short-term interest. Great. And it's almost guaranteed. With a stablecoin, remember, it's a combination of cash, repo market, and treasuries. And I have to worry about transaction costs every time I move it. So there's some negatives there. One of the best arguments for stablecoins over a treasury is when you have a stablecoin, I can now take that stablecoin and go out and participate in an entire universe of different financial products. I can go trade decentralized options, futures, Forex. I can trade almost anything out there. I can go to identity tokens and swap tokens and lending protocols and all these different markets. I can't do anything with that treasury other than just continue to get paid my coupon rate. So very different animals, as Big Eb says. They are completely different. There are lots of businesses that fail that are not a scam. If you're practicing deceptive practices, that's a scam in my opinion. Yes, I think that what these guys are doing is deceptive. It's deceptive. Ripple Labs. If Ripple Labs was completely out of this and it was just someone else, then I'd feel more comfortable with it. But Ripple Labs is the major funder of this SPAC to raise capital. And they're going to do a lot with their marketing to push it up. And yeah, they'll be on CNBC talking about it. Steve says, surprising to me the broken moral compass of so many people. Well, when you have a lot of money, and we're talking hundreds of millions, if not billions of dollars of profit and gain that could happen like that because of these things, morals jump out the window pretty darn quick. And, Ripple will argue that, well, we're a great company and we want to be, the biggest out there. That's great. But I'm more a fan of decentralized projects that don't have arrogant leaders, that don't have lobbyists out there taking their hundreds of billions of dollars worth of tokens and bribing politicians. I think this prevents free market activity. And I think that that's a big challenge here going forward is how Ripple is squashing competition because they're on Capitol Hill lining the pockets of Democrats, Republicans, Libertarians, Green Party, whomever you want. They're not concerned with who the political aisle is. They're going out there and paying politicians to give favorable treatment to Ripple, maybe the Banking, Financial Services Committee, etc. So that to me is not a good thing. Can't you get a better rate of return on USDT and USD over treasuries? Right about the same. You get right about the same. right around 4%, right? So you can go short-term treasuries and get a little bit higher. I would actually contend that you probably get higher rate of return with treasuries. So I'll bring up your yield curve here so you can see that. Bam, bam. So right now with your short-term 1 month, you can get 4.1%. You can get about the same rate with a stablecoin. So the real advantage to a stablecoin, Patrick, is its utility. You could do so much more with it. But if you're just looking to make 4.1%, just buy treasuries. It's an easier way to go. All right, let me run through our top 8 here. We went totally off track. This has been interesting too. We talked about the 10-year. I thought we'd see a backstop at 4%, and we're now below that. We've been below for a couple days now. We're at 3.98. We drew out here a measuring object from the descending triangle, which goes all the way back to January of this year. Lower highs, lower highs. It finally broke down below its neckline there, and it looks like, I feel like you're going to get more downside movement in that 10-year, which should be great for the housing market. You got the target there is 3.75%, so only 25 basis points away at current levels, and we're probably going to get a rate cut here on October 29th or October 30th. And Steven says mortgage rates must be dropping. From what I'm reading, they're actually staying relatively flat, and that shouldn't be the case. They should be dropping, and as this 10-year continues to slide, we should see mortgages start to drop as well. So that was your 10-year crude oil. Not looking so great, but boy, look at those double hammers. You had back-to-back hammers today. With the issue that's going on in the Middle East, right? You got the issues going on in the Middle East, again, flaring up. You got attacks happening. Would not surprise me to see this have a pretty sharp jump move to the upside. I'll get rid of some of these lines because they were kind of old and not important anymore. At least I don't think they're important. So I'm putting a line across the high of today, which is $57.37 for the crude oil futures. If we get a rally tomorrow that starts below 57.37 and breaks that tomorrow, I think you got a pretty good upside move here. It's a double hammer. You got long bottoming tails 2 days in a row. It feels like the tension is starting to build back up over there attack wise. So this to me would be a pretty nice pop to the upside, possibly tomorrow if we can get above that 57.37. Dollar index pretty much flat on the day and not a lot going on from a trend perspective. So I'm just going to leave that one there. Is there a way to play oil outside of the futures? Yeah, sure. I mean, obviously you could go to the different refining companies and oil companies if you wanted, or you could use USO or UCO. There's different. There's OIL. There's a lot of different ETFs out there that are representative of oil in different market segments. So there's plenty of different ways, Steve, to access oil. Fifth place today was your S&P 500, 1.06%. Not at all-time highs, but still looking pretty darn good. Again, the trend is your friend till the bend at the end. We really had this one big sell-off on October 10th, and since then it feels like it's looking pretty good. You got longer bottoming tails on pretty much every candle over the last 5 days. Today, nice big green one for the S&P, 1.06. NASDAQ was 1.28% to the upside. At this rate, looks like we're going to be at all-time highs by tomorrow. Just that trend is your friend to the bend at the end. Of course, we have some earnings to talk about, which I'll get to here in just a minute. But all in all, looking good for the NASDAQ as well. The Russell beating out the NASDAQ, though, 1.93%. Still not at all-time highs, but it's within striking distance. It could happen at any moment. And then, of course, gold back on top. All-time high yet again. Intraday high, all-time closing high. $4,359.40 where futures markets are at right now. So phenomenal move up there in gold. Michael asked me, is gold or Bitcoin better? I think that you should have both of them in your portfolio. Again, they're very different entities. One is a physical commodity that you can hold and is tangible and you can keep if the world goes to pot. Bitcoin is digital, universal, can be transferred anywhere, anytime, much cheaper. So I argue that Bitcoin is digital gold. I would say if you have a percentage of your portfolio, let's say you 10% of your portfolio you say is gold, fine. Maybe you take some of that and you allocate that to Bitcoin. Does it have to be 5%? No. But you could certainly put them, maybe a small allocation in Bitcoin. But I think that Bitcoin would be digital gold, and I think that you should certainly have allocations to that for the long haul, not as a short-term trade. And leader today was Bitcoin. 4.12% pop to the upside. Let me get rid of some of these lines. My chart's getting a little bit ugly with all these lines in your screen. Bam, bam, bam. I was pretty concerned with this big drop we had on Friday. We actually closed outside that yellow box I had drawn, and that was 107. We got all the way down, as I mentioned, to 103 and change. Not good. Now, all of a sudden, a nice big pop to the upside. Let's see if we can maintain that and hold it. Again, for those of you that want to track the price of Bitcoin, just type in BTC USD under indexes on TradingView, and you'll get the 24-hour, which is a much better representation of Bitcoin, in my opinion. Let's see. Double hammer after a big fall, sell off on Monday, and there's a lot. Exactly, Patrick. The thing I don't like about that is it's a double hammer. If it was a single hammer and followed through, amazing, but we got a double back to back. So pressure is still there pushing down. Steven says that the Bitcoin chart still doesn't look great in my opinion. I agree. It doesn't look great. It certainly does not, right? Especially if we take it like frame by frame. So if we go back to here, I say here, for the podcasters, I'm just showing all the way up until August of this year. It looked amazing. Okay, go forward a couple months. Oh, now we started making some fresh lows, which is not good if we get into September. Now you're in October, we make an all-time high. Okay, you can almost kind of forgive these little bottoms from August 31st and from September 25th because you're at all-time highs. That is concerning, right? Now it's like, well, am I supposed to look at the peaks here? It's a megaphone pattern, right? A lot of people will call it a megaphone pattern or a broadening formation, essentially. And this is not perfectly drawn, people. Don't jump all over me because of my charting skills here. But you look at this, and it's clear that the lows are getting lower and the highs are getting higher. So it's a broadening formation. Typically, when you have not lower highs, Steven, you got higher highs. I mean, if you go from the peak on October 5th, yes, we're lower highs and lower lows. But the bigger context here is a broadening formation. Based off of that, if this does do what it looks like it's going to do, that should push us back up to all-time highs here. And the question is, which one of these is going to give? Which one's going to give first? Do we stop making lower lows or do we stop making higher highs? To me, that's the question, and I don't know. I don't know the answer for that one. Again, I'm bullish and biased, obviously, on Bitcoin's price chart. I do think that the bias is to the upside here, just with all the tailwinds, politically, everything. I think Bitcoin should be moving higher and higher. So there we go. All right, let me go to your economic calendar so I can get that stuff out of the way. For today, as you can see on Monday, there was really nothing for the U.S. For tomorrow, though, we do get a little bit on the speaker side. We have, remember, Waller will be speaking, two different speaking engagements, one at 9, then one at 3:30. So the 9 a.m. one will be during market hours. So that will be important. Actually, right before market open, that was an important one. Now, the earnings front is more important. Today, you had Cleveland-Cliffs, which steel company out there, still losing money, but better than expected. Their stock rose 21%. They're still losing 45 cents per share, but they're up 21% on the day. Love it. It's so great. You can still lose massive money and be up 21% on the day. But tomorrow, and actually later this week, we really start to get more big name companies, and that's where it starts to get exciting, right? Tomorrow we have Netflix aftermarket close, so I guess we could do a little popcorn trade of the day graphic here because I paid for these graphics. Why not have our popcorn trade of the day? Yes, that will be Netflix tomorrow. That's going to happen after market close. Right now they're expected to make $6.89 per share, but you also have a couple GE companies, right? G companies, I should say. You have GE Aerospace. That's before market open. You have General Motors. You have Lockheed Martin. I think Northrop Grumman was on here. Big defense day tomorrow. You also got Capital One, Philip Morris, Texas Instruments, 3M, Coca-Cola. I mean, it's a big day for earnings. But later on in the week is when we start to get some of the heavier names. But for right now, that's your earnings calendar and your economic calendar for tomorrow's session. Now, your long Texas Instruments hoping for a big bounce. Don't say hope. Don't say hope, Steve. You're optimistic. Remember, in my opinion, when you say the word hope, it's like, I don't know. I have no clue. I want to make money. Let's be positive about it. You've done your research. You've done your analysis. You're expecting or anticipating a big bounce tomorrow, right? Hope is just throwing caution to the wind and saying, let it land where it lands. No, let's be positive, Steve. There you go. Optimistic. Much better, right? Psychologically now, you're not on the fence. You're like, it should be good. We'll be fine. Let's see. Otani, last game was one for the books. Yeah, I mean, honestly, I hate the Dodgers because I'm a Giants fan, but that is a once-in-a-lifetime player. He is absolutely incredible. What an amazing, amazing person. Okay. That's going to do it for me for today. I will be a little bit more prepared for tomorrow. I'm just trying to catch up. I've got so many things going on. I've got my Halloween decorations coming to fruition. The yard's going to look pretty darn scary. And I was just about to wrap up, but then Hendrik throws in the curveball. He says, can you talk about CAT? Sure, let's talk about it. They'll bring up CAT, right? We bring up Caterpillar, which epic chart. My only real concern here is you've got earnings on the 29th. So next week you've got earnings. Be careful with that one. You know, earnings are always a wild crapshoot. Margaret, beat it, Margaret. Get out of here. You know, when you have a security especially something like Caterpillar, that goes from this low point here in April of this year, which was $265, presently sitting at presently sitting at $531. That's a 100% rally in 136 days for a very mature company. So this isn't a .com company. That makes me a little bit nervous. I'm not saying that it's going to come crashing down, but if I'm in your camp, Hendricks, and I have some of this, for me, it's a no-brainer. I'd much rather take some profits than let it all ride and suffer through a colossal gap if it happened on the earnings. So I would take a little bit off the table just to have that peace of mind and let the second half run as you go through earnings. But, it's really hard to beat that trend. That trend is amazing. I feel like it's a bit too strong, right? This is an anomaly. You don't really see trends of that angle lasting too long here. You had one back in November of 2023 that rallied all the way through April of 2024. Similar, but this is just keeps on going and going and going and going. So that makes me a little bit nervous. Just look at this compared to anything else you've seen on this chart. It doesn't make sense. It's a total outlier. So I would be cautious on this one. I would take in some profits. And here's the thing that sucks, Hendrik. As soon as you take profits or you close your position, they'll gap up like $100 or something just to spite you. But look, I'd much rather take some money off the table knowing it's mine. You're not taking this away from me regardless of what happens with it. So because I reduced my cat position 50% last week, still bullish on it though. Yeah, it's hard not to be, right? How can you not be bullish on cat? It feels like it's deserving a pullback. Like, it wouldn't surprise me to see this drop from 530 down to 500, which is the origin of that move that started on Tuesday, October 14th. But don't give it back at the end. Protect profits of the trend. You know it. Absolutely. All right, guys, that's going to do it for me. And I didn't get a chance to dive into people's questions, but I will do more questions tomorrow. If you have something you want me to discuss on the show, you can email me at tradermerlin@gmail.com. For those who are new, I know I've got some new people here lurking in the shadows. Feel free to type in and engage with this audience. My audience doesn't buy it. They're all pretty good. And if you are brand new, hit that like button or hit the subscribe button. You don't have to hit the like button. If you like the show, well, you can always hit the like button. But if you're new, hit that subscribe button. I will see you guys tomorrow. Email me any questions, comments, feedback, things you want me to discuss, and I'll see you tomorrow. Take care.